This morning I'm going to show you the relative performance of the MSCI World ex-USA index against the world index, which is more or less a relative performance of the US market against the world. Then I'm going to discuss a few market timing sell signal available on the S&P. So the first one was on Wednesday on a daily basis, and we're going to have also a weekly contrarian sell signal on Friday, so which is today. Then we'll end with an overview of the US and German bond markets, which are showing some more positive signal from a technical point of view. So first of all, this is a chart. So on the top end, you see the chart of the MSCI World excluding USA. So you can see that this has been a very difficult chart to manage over the last few months. So after a spike in January, we had a mean reversal move, then a tight trading range forming over the last few months. So it's difficult to have a strong view, honestly, on this index because the long-term trend is still positive, and we can see that the 200 moving average is providing support since a couple of months. But on the other hand, when we look at the relative performance of MSCI World ex-USA versus MSCI World, we can see that World ex-USA is tanking again. We saw a stabilization last year, which was pretty encouraging for the World ex-USA. But since the start of the year, renewed weakness, and especially over the last months, a very weak performance of MSCI World ex-USA against MSCI World, with new lows this week on the ratio. So if we look at the long-term outlook of this ratio over the last 30 years, we can see that it's the longest period of underperformance of World ex-USA versus World. So the outperformance of the US stock market started with the subprime crisis in 2007-2008, which means that the outperformance of the USA against the world is the longest period, is the longest one in 30 years, lasting for 10 years. So this is a very surprisingly long outperformance. So underperformance of World ex-USA. It's difficult to know exactly when this relative performance is going to reverse. I think that what is likely is that we are near the end of this underperformance trend, and I see similarities with what happened at the end of the 1990s. So we had a technical bounce attempt, a bit like what we saw last year, renewed weakness with a kind of capitulation move on World ex-USA, followed by a significant reversal. But the problem is that it could take a long time. So even though in the short term we may have some relief rally of World ex-USA, when we started to see such a reaction yesterday in Europe, for example, but I think it's going to be a very long process. Anyway, in the short term, what we can see is that we're starting to see trading sell signal on the S&P close to the 2800 area. So you can see this important resistance zone. And on Wednesday, which was the day of the Fed, we had a daily setup 9 sell. So this is the 9 you see here, calling for the possible start of a pullback, or at least an hesitation around the 28 area resistance zone. If we look at a weekly time frame, we should also get a weekly setup 9 sell tomorrow, so on Friday evening. So this is today. This is the first setup 9 sell signal since November of last year, as you can see here. As you can see, it's not an indication that the S&P is ready to collapse, not at all, but an indication that we'll probably see a kind of sideways pattern forming around 2800. If I now switch to bond market, so I will show you US and German 10-year bond yield. So this is in the US. What you can see here is a clear 5-wave up pattern according to Elliott wave, and followed by the start of a correction on US 10-year bond yields. I think that this consolidation process is going to last longer. So 310 is now a big resistance zone, and I don't expect further rise beyond this level, these levels in the near term. I think we are more likely to see further consolidation of US 10-year bond yields below 310, and possibly the start of a new pullback to 270. So you can see the support zone here. In Germany, we have a similar pattern. So after the panic selling move we saw in Italy, a mean reversal of the last 2 weeks. But as you can see, there is an important resistance at 0.50% on German 10-year bond yields. I was buyer since last week around this level, and I remain buyer. And I think that what is more likely is to see a new pullback starting possibly back to 0.30, maybe a bit lower.